Hello, trading is closed on March 29, 2019. We'll go over our calls. Had a target of 28.2365. I thought it probably wouldn't print, but it did. It was support resistance right at that level. We said that this was a negative pattern, and unless we gapped up over this high, or preferably the recovery high, that lower prices should print. Well, we gapped up over the high, so before the market opened, the call was killed. Look for the pattern with the early low, which is what we got. Monday's pattern is the one with the early high. It tends to have an early high and a late low. Tends to be a negative day. Doesn't mean you won't gap down first. During the day, MEJT gave a buy signal here. We got the minimum. We usually get more than the minimum. Here it gave another buy signal. Said this drop was false. This rally was false. That prices would retrace. And that one worked too. Nothing from the system for Monday. Well, with 5 minutes left to trade, we had the same pattern for the fourth day in a row. We had a gap up, higher high, and couldn't hold them. Now, this move up was in the last 5 minutes, and it was a wall of buying into the close. If this is the real thing, we should continue higher. Markets that start low, rally all day, close near the high, that's a bullish formation, especially on a Friday. Almost always, it carries through into Monday's trade. If instead you gap down, it has very negative implications. Now, this would be 4 days. Now, if this rally is false, we will gap down. We'll gap down at least under these lows and more likely under this one. So I think by the time we open Monday, we're going to see if this is just position squaring ahead of the weekend, or if it's going to be met with a massive failure. Now, this was our scenario. We thought this was the high, thought this high would definitely hold, and this high would probably hold. This high hasn't held, and the move up, if it continues, will probably take out this high too and kill the whole idea. Here's your 50 moving average, here's your 200 a day moving average. If we continue higher, they're going to cross. It's called the golden cross. Typically, when you cross in this direction, it's a sign of a market dropping. When you cross the other direction, it's a sign of a market going up. So if I'm right about this holding, you really want to fail right here. This was the count we had, depending upon this high holding. But no matter what happens, you can always come up with something that seems to work. You can just move C from here over to here. And if this is an ABC, then here's C is just equal to A if we stop there. So if this is real, we're going to continue higher and probably take out the high that I thought was going to hold. Until that happens, I'm still in favor of that recent high holding. So I expect to see a sharp gap down when we reopen Monday, but that doesn't mean I have to jump the gun. I can wait to see what happens Monday, because if we do get a sharp gap down, it's probably the start of something big on the downside, which I still think is a more likely scenario. But if these things fail, they tend to fail in grand style. So I'm just going to have to see where the market opens on Monday before risking any money. And that's today's call.